Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be covering our 5 stocks with X dividends next week. Now, I changed it up a little bit from the past ones. Going forward, I'm going to try and screen these a little bit more. I'm going to be taking a look at price to earnings. I'm going to try and get only stocks. I take a selection of around 50 or so stocks, and then I screen them myself. I look for price to earnings below 25. I look for yields that are greater than 2. This may knock out some of those ones such as Nvidia, Activision Blizzard, Apple that have, Starbucks. They'll normally have yields underneath 2%. They're more of growth stocks, but they do pay out for their shareholders. So I do knock a few of those out. I'm trying to keep my own portfolio between 3.5, a little over 4%. I would love to keep it around a 4%, so I am right now at about 4% yield. And we take these 5 stocks, we run them over, we go through their dividend dates, the price comparison to yield, the price to earnings average in comparison to the industry, payout ratio, dividend growth, history, and some other factors. So that's all coming up today. I have 5 stocks for you guys. I have the Omnicom Group, Seagate Technology, Cincinnati Financial, Pro Assurance Corporation, and Portland General Electric. So those are some of them I've actually taken a look at. One of them, Portland, it's in my home state, so that may be one I would consider. But again, we're going to be deep diving into these, not really deep diving, but we'll be doing like a soft screening here in this video. And I've already released the article about 7 hours ago. I wrote it up and released it on my website. Probably be almost 12. It's after midnight now. So anyways, let's go ahead and jump into it. So if you are brand new to my channel, first of all, I make stock market, dividend, investment style videos weekly, so you consider subscribing for future financial videos. So all of these stocks are ordered by their ex-dividend date. This week coming up, I have stocks that are ranging like Monday, Tuesday, Wednesday, Thursday, Friday. I believe we have 5 stocks each. Actually, I think we only have 4 days, but each of these are on a different, actually 2 of them are on the same day. Anyways. We have ticker symbol OMC, which is the Omnicom Group. It is a leading global advertising, marketing, corporate communications company, and it has numerous specialty firms providing advertising and strategic media planning. And it has over 500,000 clients and located in more than 100 countries. So very diversified, not just national, but international. Their ex-dividend date is on the 18th of December, which is next Monday. So you would need to purchase the stock on Friday, sometime in the after hours or prior, to hold it in your portfolio Monday morning when the stock market opens. That way you're eligible for that dividend pay on the 9th of January. Now, I have their graph right here showing they pay out 60 cents. Looks like they just increased their dividend. They declared a dividend increase back around October, and they're going to be paying out their first 60-cent dividend. Now, they bumped it from around a 54-cent dividend to 60 cents, which is a dividend increase of around 9.09%. So I have that number right here. I did the math already and included that here. Their current PE ratio is actually very nice, 14.84. So that's actually below average. Right now you can see for the year they're actually on a downwards trend for their price to earnings average, so that's very nice. That means the price in comparison to their earnings has been fluctuating to the point where their earnings are growing and their price is staying at a value buy. And as we can see here, the yield right now was above around a 3.31, whereas now the stock is picking back up. It was down in the $66 range where it was a very good buy, and now it's jumped up almost $10 in the last looks like in the month of December it's jumped over $10 alone. So this could be one to look for. It does have a pretty high price to book value of 6.8. So OMC stock, when charted, it shows that it does have a current yield to price. It does have a higher yield price, yes, that's correct, which would indicate it may be undervalued at this time. The stock is over in the price to earnings average for the industry. It is sitting below 60% payout ratio and has had dividend growth for 7 years. The price to book value is 6.8, which is higher than 3.0, where value investors would consider a value. So right now, this stock is sitting at about a 14.8. The industry average is 14.4, so it's not too high in comparison to, say, the S&P 500, or the median level for the stocks is around 15. So this would actually be a very nice in comparison to the PE ratio. The dividend yield sits at around 3.22% right now. So this data is actually pulled from dividend.com, whereas this one's pulled from YCharts. So they're not taking into account that they just declared their dividend increase by 9%. So this is showing 2.95, whereas the correct dividend yield is 3.22. So this would be right up in here in this area. So at this moment, this looks like a great opportunity to buy this stock. It looks like it's on its way back up. Of course, you'd always want to do your own research. So deep dive it a little bit further if you're interested in the Omnicom group. The next stock is Seagate Technology. Now, if you think of a hard drive, you may think of Seagate. Seagate Technology is a manufacturer of hard disk drives. Seagate has been around and a leader of development of hard drives since 1980s. So they were created in 1979, and then they started developing these hard drives, and they've been just a world leader in their hard drives since 1980. So a very well-known company. I'm sure a lot of us know, if you pull out your hard drives at your computer right now, they are probably Seagate. So their ex-dividend date is Tuesday. So you do need to buy this stock on Monday or prior, and then you'd be eligible for the dividend payout on 3 January. Now I have their stock charted right here. We can see they pay 63 cents per share. Now when I did this, when I pulled this information, they haven't had an increase in their dividend since back in 2015, but they increased it by 16.67%. So if you look at the 2-year or 1-year average, I would like to look between a 5 to 8 growth for a year, but they do increments in 2 years of around 16%. So coming up in 2018 would be a time when I could see this stock getting another increase of, say, 5 to 8%, or they may just double it and go 16% again. So I could see going forward, Seagate may be able to increase their dividend a little bit. Their payout ratio is sitting around 63%. So we'll have to see for the future. Their price is sitting at $42.20, so not too expensive. Their yield is actually very nice at 5.97. They were sitting at nearly at 8.0 yield for some time back in August, it looks like. So if any of you guys purchased Seagate back there, I know I had looked at it, but I didn't know it was running down really hard at that time, and I didn't know if it was going to pick it back up. It's a hard drive. We use hard drives all the time, 16 inside of our I can't think of the term right now, but we use a lot of virtual servers, so it takes a lot of drive space, and SANs. So we take a lot of storage devices. So they do a lot of that. Anyways, price to earnings is pretty good as well, 15.92 in comparison to the S&P 500 right now, which is around 26. This is actually a really nice buy, and it has been trending down. You can see that it was up in the 31 range back in the beginning of 2017. So this stock has trended down quite a bit in the price to earnings. Their price to book value is around 9.8. And that's actually pretty average for them. They sit around 8 to 9.8 when looking at their history in the past. So the Seagate, when charted, it shows that the current stock has a higher price to yield at this moment, which would indicate that they may be overvalued at this time. The stock is under in the industry price to earnings average. They are sitting above 60% payout ratio and has had dividend growth for 6 years. Their price to book value is 9.83, which is higher than 3.0, where value investors would consider a value. So the stock is currently sitting at 15.3 price to earnings, industry 23.4. Their yield is sitting at 5.98 right now, but they may be due for a hike here in a little bit, so this could get bumped up into the 6% range. If you bought it back in August, pat yourself on the back on that 8% yield. Their payout ratio is, it's 63.2. It's not too high. I like to look for stocks, 50, 60%. I like to look for stocks somewhere below 60%. That's my strategy. but I have made exceptions in the past, depending on the stock and the history. And if they're REITs, dividend growth 6 years. I don't remember if they cut their dividend back in 08, 09 timeframe, but they have been doing their dividend increases since back in 2010, 2011 area. And the last time, of course, they increased their dividend was back in 2015 by 16.67%. So that is Seagate Technology. The third stock we're going to be taking a look at is ticker symbol CINF. This is the Cincinnati Financial Group, and they offer property and casualty insurance. Their main business of the three our main business through our three standard marketing companies: the Cincinnati Insurance Company, the Cincinnati Indemnity Company, and the Cincinnati Casualty Company. So they have their primary one, the Cincinnati Financial, and then they run a couple of their main businesses underneath. And their ex-dividend date is on Tuesday, so that's 19 December. You do need to buy it on Monday or prior. You would then get eligible for the payout on 16 January. Looking at this one, they increased their dividend back sometime at the early of this year, looks like February timeframe, to 50 cents per share. That was an increase of 4.17. Now, it's not very high as far as annual dividend growth, but they do special pays. When I looked at their graph, they had some special payouts. So while their yield may be a little bit low and their annual dividend growth is a little bit low, they do pay out every couple of years. Very nice payouts to their shareholders who are longtime holders. See, we covered their PE ratio, 24.66. In comparison to the S&P 500, it's not too bad, but in comparison to, say, the average of the company, I would say it's a little bit higher than normal. The yield right now is 2.66%, and the price is $74.46. Their price to book value is actually very low in comparison. It's a financial company, so a lot of banking, financial, they usually have a pretty nice price in comparison to their book value. So the Cincinnati Financial, when charted, it shows that the current stock is a higher yield to price, which would indicate it may be undervalued at this time. The stock is over in the price to earnings average. It is sitting above 60% payout ratio. It has dividend growth for 56 years, so I would consider the stock recession proof. Its price to book value is 1.62, which is lower than 3.0, where value investors would consider a value. Now, stock is at 24.7. Industry is at 23.3. The dividend yield is at 2.68. Annualized payout is around $2 per share. The payout ratio is 75.5. So it's pretty high for a financial group. But again, they've been paying out dividends for 56 years. So I think this is right up there with the Johnson & Johnson and Procter & Gamble, so quite a while. And their annual dividend growth is around 4.17, but again, they do special payouts. Number 4 is ticker symbol PRA, which is the Pro Assurance Group, and they mainly operate as a specialty insurer offering professional liability insurance products primary to physicians, dentists, chiropractors, optometrists, and allied health professionals. Their ex-dividend date is Wednesday, so you do need to buy this stock on Tuesday or prior to be eligible for the payout on the 10th of January. So they do, so the $5 that you see here, they just did a special payout, and they do these pretty frequently here. So I'm going to go ahead and show you here. So they paid out a special payout of $5 per share. Their stock price is $61.30. You can see that when they did their payout, their price, of course, did go down by a little bit, but look, this stock, it looks like it jumps up and down quite a bit. So right now it could be peaking a little bit and it could be coming back down, but they did do a huge payout of $5 per share. Their current stock price is $61.30. Their PE ratio, their price to earnings ratio, is 22.7. Their current yield is at 2.02, but again, they do special payouts and it's pretty frequent. When I was looking at the stock, their price to book is relatively low at 1.76. Now, PRA stock, or the Pro Assurance Group, when charted, it shows that the current stock has a higher price to yield, which may indicate it is overvalued at this time. The stock is sitting under under in the industry price to earnings average, under 60% payout ratio, and it's had dividend growth for 0 years. But they have special payouts. So their price to book value is 1.76, which is lower than 3.0, where value investors would consider a value. So here we can see the stock is sitting at 22.5. The industry average is 23.3. The dividend yield is 2.02%. They pay out $1.24 per share. So if you spent $600, picked up 10 shares, $613 picked up 10 shares, you get paid out about $10 per year of around $250 per quarter. Their payout ratio is 59.3, which is sitting right below 60%. Their dividend growth is 0 years, but they do special payouts. And I'm going to go ahead and just bring that up real quick. I'll go ahead and go to dividend.com, and the ticker symbol is PRA. So here, if we go to the bottom, we can see the dividend history, and they do special payouts. And if we go up here to the top, you can see that they started paying out dividends here back in 2011, and they've done some really nice special payouts of $1.25, $2.65, $1, $4.69, and $4.69. And the great thing about these payouts is they're counted essentially like regular payouts. I don't know if you have to pay the full taxes on it. That would be great to talk to a financial advisor on that, or just kind of, if anybody knows, in the comments below, if on special payouts, if you have to pay your regular income tax, or if you would just get taxed in the long-term tax. So let's go ahead and jump back over here. And okay, and for our fifth and final stock, we have POR, which is the Portland General Electric. They engage in the generation, purchase, transmission, distribution, and retail sale of electricity, and serve over 800,000 retail customers in Oregon. So very big utility company. Their extended date is on the 22nd of December, which is Friday. So you do need to buy this stock on Thursday or prior to be eligible for the payout on the 16th of January. Now, they pay out 34 cents per share. The last time they had a payout was back in October. This is a 147.10 paying stock. So January, April, July, and October. So they pay out 34 cents per share. They're right at $47.50. So if you spent like $1,000 on this, you could get what? 2 times 10 is 20 shares. So 20 and 3, you get like, what, $6? I can't do the math right now. It's almost 1. So their current yield is at 2.76%. Their price to book value is 1.77. So income, their price to earnings, I think that's about average for a utility company. You can actually see here for the industry, it's at 21.3. So POR stock, when charted, it does show that the current stock has a higher price to yield, which would indicate it may be overvalued at this time. The stock is at the industry price to earnings average. It is sitting above 60% payout ratio. Again, it's pretty normal for a utility company. It's had dividend growth for the last 11 years, so I would consider this semi-recession proof. The price to book value is 1.77, which is lower than 3.0, where value investors would consider a value. So price earnings, we already covered it. Their payout ratio, 2.85. Their annualized payout is $1.36 per share. Their payout ratio is slightly over 60, 60.2. Dividend growth, 11 years, and their annual dividend growth is around 6.25. That's pretty normal for them. So that is it for this video. I hope you guys did enjoy the video. If you would like, the article is actually in the description below. You guys can click on it, go out to my website, and just kind of go over it yourself. If you have any questions on any of the stocks, or I'd like to see, what's your opinion? If you had to pick between the 5 stocks that we covered today, the Omni Group, the Seagate Technology, the Cincinnati Financial, the Pro Assurance Corporation, and the Portland General Electric, which one would you consider? So I myself, I'm in technology. I already have a lot of technology stocks, so Seagate may not be the one that I would choose right off the bat. While they are not badly priced at this time. I could see them increasing their dividend here in a little bit, but if I had to pick one, I would probably go with the Omnicom group. I believe it's at a good buying point. It actually had pretty nice ratios. You know, as far as a soft screen, I would definitely want to go look at their balance sheet, go look at their earnings, go take a look at their quarterly reports, their annual reports. Take a look, you know, read over the whole annual report for the last year, what they've been up to. They should be due for a new one coming out here sooner if they have not released one yet. And definitely want to do a deeper dive into that. But for the long term, it doesn't look like it's bad stock. So that would be my choice. What would your guys' be? Go ahead and leave that in the comments below. So that is it for this video. I want to thank everyone for watching up until this point. If you did like the video, hit the like button below. Remember to subscribe if you're brand new. If you are not new and you come to my channel as a subscriber, thank you guys for watching. If you have any questions or want to say hello, please leave them in the comments below. Thank you for tuning in and have a great day. Bye-bye.